Okay, here we go. Lucas Real Estate Podcast. Head on over to our website, lucasrealestate.com. That's Lucas, Lucas-real, REAL-estate, ESTATE.com to review all these articles in depth. We're going to try to do a real quick overview right now. This one is on the 2023 IRS taxable gift exclusion amounts, which have been raised. This is a very commonly misunderstood issue. There's two numbers that we need to pay attention to. One is whether or not you have to report something at all. And then one is whether or not you have to pay taxes on that amount. So this can come into play typically when someone dies and leaves real estate that we work in, but obviously jewelry, artwork, gold bars, IRAs, whatever it is. It applies to the whole estate, but we work in real estate. So if someone is to leave an estate, the 2023 IRS taxable amount is, drumroll, $12,920,000 per person. That's the highest it's ever been, and that's why we're saying 2023 is definitely a good year to die if you have to do so. So that means that if someone has for example, a $3 million principal residence and a $7 million rental, duplex here in Newport Beach, and they pass away and they leave all of that to their children, well, there's going to be precisely zero estate tax or gift tax due on that amount under current law because it is under that $12.92 million. So again, that's a very high number. It's never been this high. And that's set to actually go up a little higher next year in 2024, but then it does sunset. It goes back down in 2025 unless Congress changes that. So either, talk to your congressman and get that law changed if you're worried about it going down, or, discuss, these kind of issues with a tax advisor or a real estate professional that knows about these things like ourselves. The other number to be aware of is the amount of reporting. This is what's kind of misunderstood. So that amount's been raised now to $17,000 per person. So in other words, if you want to give your children $16,000 a year, you can do that. Write them a check for $16,000, and there's absolutely no reporting requirement whatsoever. IRS doesn't even want to know about it. But if you write them a check for $18,000, well, again, no taxes whatsoever are going to be due on that amount, but it is something you have to report. So once you go above that magic $17,000 threshold, that is something that needs to be reported. But again, until you get to that $12.92 million, there's going to be no taxes due. If you do report it, it does go against your lifetime exemption. That's not like an annual thing. It is a total. So if you give away, $8 million this year and then you die and you've still got $20 million estate left over, that obviously is going to become a taxable event. But those are the things, and it is per person to keep in mind too. So if you're a married couple, it's those numbers times two. I don't do math as well as I used to without a calculator. So you'll have to do that yourself. 12.92 million times two. If you're a married couple, that's what you can leave. And then the $17,000 per person. The $17,000 one is kind of a fun one too, because people play games with that. So let's say you've got 3 kids and you've got a husband and a wife. Well, you can each give $17,000 to each child. So that's kind of a lot of money per year that can be done without any sort of reporting requirement whatsoever. So those are the overviews of the 2023 IRS taxable gift exclusion amount. We hope you've enjoyed our podcast. We're calling it a podcast and not a video because that's what we're doing. And if you like this, you can subscribe on our YouTube channel, or better yet, for our newsletter on our website. That is lucasrealestate.com, lucas-real-estate.com. Scroll on down to the newsletter section, and we'd love to send you more information. Thank you so much.